Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Tuesday, the 7th of May, Bull versus Bear webinar. Steve Miley here on the call to trade day. Welcome, everyone. It's going to be a fairly brief webinar in this morning. I'm a big believer if there's not much to say, don't try to say it. So there's not a huge amount going on. We covered yesterday that the data from the US is super light this week. One thing I think I just wanted to return to, though, I didn't actually point out, and it's a ways out, though. But on Thursday, we do get the Bank of England are in play. We had the RBA, Reserve Bank of Australia, today. The Bank of England are in play on Thursday. Where are they? Here we go. Interest rate decision from the Bank of England. No interest rate change expected. It's going to be interesting to see what they have to say. Remember, the UK was running a lot hotter inflation previously, has come much more under control, as we've seen globally, some stickiness in that inflation, those inflationary numbers. But it's going to be interesting to see what they have to say. Do we get an edge toward one of the other global central banks, maybe, who have kind of shifted a little bit from more dovish to slightly more hawkish, as the Fed did? Are we going to get a step back towards maybe slightly more dovish? Remember, the ECB are very much on track to cut interest rates in June. So that's what I just wanted to throw that back in there, because it's something I didn't cover yesterday, I think. But the data and the RBA overnight in here left rates unchanged as anticipated in here. So nothing, no great shakes from the RBA in here as far as I have seen so far overnight. The Reserve Bank of Australia and the Australian dollar is a little changed in here. It's slightly lower in here on the day. So I don't think much went on as far as I could see. Data from Europe this morning has been light as well. You can see there is quite a lot of it out there, but none of it is really particularly big headline data in here. It's been fairly quiet on that as well. And we did have just some construction PMI data in here, but I mean, out of Europe, I mean, again, not particularly significant data in here. Eurozone retail sales data, but none of this particularly significant. And if we go through into the US day in here now, you can see very, very little of note, not hardly anything to even speak of in here. Weekly data, we do get Kashkari speaking at 11:30 Eastern, so maybe watching out for that. But a very light calendar. And also, I'm not going to come back to this again in here, the earnings calendar, maybe when we come to NVIDIA, which is in a couple of weeks. But the only real standout on the earnings calendar for the whole of this week, the only big sizable company that's going to really have any kind of impact at all into major US equity indices is Disney. So Disney reported, you can see in here, EPS better than expected, revenue a very, 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 very slight miss that is in here on revenue. And if we actually go in here, Disney earnings top analyst estimates are streaming nearly breaks even in the quarter. So in here, slight positives out of Disney. So again, having no significant real big impact into the major indices overnight so far, with that data released already today. US stock futures are mixed. We did have a better day yesterday. Again, I said that I think this week is going to be an up week, but a grindy up week. We had an up day yesterday. Today could easily be, I'm slightly positive, but it could easily be a grindy positive day. We might see a slight dip in here today. I still feel the underlying pressures are higher. We've got, oil prices heading for a higher second day. We've seen in here risk on mood in markets, but with ongoing tensions in the Middle East, Israel rejecting a ceasefire proposal in here. Futures, not much happening in here. We did get shares in Swiss Bank. The Swiss bank, UBS, Union Bank of Switzerland, jumped, showing a profit in here after it started the integration ongoing with Credit Suisse, after it took over Credit Suisse in here a year ago. 2 years ago, maybe now. It seems a long time ago. So oil prices are volatile in here. Barking said the falling impact of rate hikes by the central bank is yet to come through. In terms of restrictive policy, will slow the economy and cool inflation. So we are seeing that's a fairly dovish tone in here from Barking, who spoke yesterday. And Ken Griffin, and the founder of Citadel, the big hedge fund, said the Fed is likely to cut in December if it doesn't in September, saying that the decision by the bank to keep rates higher for longer was the right one. So Kashkari is due to speak today, as we've already said. Debate on whether the Fed will cut rate this year goes on. The US bond rate is going back to its traditional role in the economy, providing a source of reliable income. So bond yields in here, as we've been speaking about, continue. Bond prices are rallying. Bond yields are going lower in here at the moment, and that should continue to help stocks on their upward path in here at the moment. So on the overnights in here, stocks gain yesterday and slightly overnight on bank earnings. That bank earnings is the UBS in here. Also UniCredit as well, doing well, and also an optimism about a rate cut. Kashkari to appear in this week. So Kashkari is more on the hawkish side, so it'll be interesting to see what a hawk has to say. S&P 500 Dow Futures high ahead of Walt Disney. Well, it's not ahead of Walt Disney results anymore. It's actually now we have the Walt Disney results are out. And in here, morning bid, cooler US takes edginess off markets and UBS jumps. So we've already kind of covered all of that as well. Apple expected to show new iPads and possibly a new chip in here. I'm not sure what this is in here. It's a virtual event going on today. I didn't know that. Okay, virtual event being today on Tuesday. So maybe showcasing those. So watching out for that. That could be a positive for Apple, but obviously much of that already built into the market. Nikkei having been closed on Monday, playing a little bit of catch up overnight in here, and obviously up with the US equity indices. So up 1.5% today with the Hang Seng, the Hong Kong Chinese reflecting index in here down 0.5%. European exchanges are up. The French CAC up 1/3%. The German DAX up just over 0.6, 2/3% in here. And the FTSE, remember, was closed yesterday. So again, playing catch up on the upside in here. That's why it's up significantly today, up 1% because it wasn't open yesterday. And we had a decent gains in here yesterday. I said, I think we could see this continue to be the theme. The market kind of not huge, big gains. I'm not looking for 2% moves on the Nasdaq and 1.5% on the S&P. Maybe 0.5%, 0.75% higher in here on each day in here. So looking for markets to just move up gradually, and there could be a few choppy days, chop sideways days because there's really not much actual data fundamental flow of anything we can go on from the macroeconomic side. So markets are just going to go with flow, and flow, at the moment really pointing us higher. As you can see in here, we're slightly up across the major indices. We have that Nasdaq actually just slightly dipping in here. Not much to add in here from what we covered yesterday on the CME Fed tool. Still looking for that first rate cut to not likely come until September in here. So only less than 33% chance in here now that we're unchanged come September. And by year end now we are pricing in only a 9% chance that we don't get any rate cuts by year end. And now we've got, 31 plus, so we've got 40%, so 60% chance now that we have 2 rate cuts by the end of the year. So it's looking like the timing for the rate cuts, although we are seeing potential for an earlier rate cut in here. Now we have only just under 69% chance we're unchanged in July. So there is an outside chance of a cut, the first cut by July. But really the market now pricing in the more likelihood we get a cut in September and then maybe another one at year end in December, and that would probably help the market avoid November, which will be around the obviously the presidential election. Not that the Fed are going to want necessarily avoid that, and they've already kind of said that the election doesn't matter, but they just need to do what they need to do, right? But they do tend to try and avoid it. So I wouldn't be surprised if they're going to do 2 rate cuts, that we see them in September and December. What else do I have for you? So yields continue to track low. We spoke about this yesterday. We had that big spike to the downside on Friday after the US employment report. On the 10-year in here, we took out this kind of 450 to 448 area and then retraced back higher into the close on Friday. And then yesterday we went lower in yield. And then today again, we're going lower in yield. And we're actually getting back down towards that spike low in yield, which is like 445. If we go back below there, and then we've actually the more activity we have below the 450, 448 area, means that we continue to push lower in yields, which is higher in price. And we go to the bond markets in here. So we're looking for the bond markets to continue to push above the recent spike peaks in here. So we're looking at 30-year, 10-year, and 5-year, reinforcing these bigger bottoming patterns that have been going on from April through May, reversals of trend lines. And if we go and then that should all be positive for stocks, and they continue to display a positive outlook in here. S&P 500 obviously took out the more recent peak. So already this week and pushing higher, attacking retracement levels in here on the S&P. You can take a look at those in the reports that you see right below you on the left-hand side. And then the Nasdaq really steaming ahead now, wiping out that previous swing peak that we had from latter April, and now charging towards various retracement levels in here that again you can see in the table in here. And I think we can hit some more of those today, but again we're not looking for big moves, more gradual moves. Here's the bond market in here, the 10-year note. As you can see, I think really important if you want a price level is just to see if we can get back up to today the spike high that we posted back on Friday which is 109.095. That's going to be the key level on the 10-year note. If we can get back up to there today, that could end up triggering some further upside pressures on bond prices, lower yields, that means, and then that can in turn help stock indices, particularly the NASDAQ, go higher. Remember, the NASDAQ is more sensitive, traditionally more sensitive. Growth stocks, because of growth stocks are calculated on discounted cash flow, higher bond prices equals lower yields. Lower yields are then positive for growth stocks, and then growth stocks, obviously more growth stocks in the NASDAQ. So hence we saw NASDAQ, significantly pushing higher yesterday. Had a very slight dip in it today, but I think we can attack some of those resistance levels and go still higher. But again, we're not looking for moves like we've seen in here, these big candlesticks. We're not looking for daily moves like this. We're looking for smaller moves and maybe even little chops back lower in here before we get further upside in here going into this week. Similarly here with the S&P. It was actually a decent day for the S&P yesterday, but looking for potentially the market again higher, but not too much higher, I'm thinking today. And we could even see some little chops lower within that and little consolidation phases before we get a next real significant impulsive move higher. And that's probably not going to come this week because there's no real trigger for that this week. Going into next week, if I do just jump back in here, where are we? And we are, this always does this week at this. Let me see. No, it's not going to allow me to do it, is it? For some reason, I get the drop down menu screws up in here. Oh, here we go. If I look to next week, let's just quickly have a look into next week and see that we've got the CPI data fairly early, and I think it's on the Tuesday. Here we go. Oh, no, PPI. Oh, maybe it is on Monday. Maybe it's on Monday. Tuesday. No, here it is. Wednesday. CPI is next Wednesday, the 15th. So that's going to be critical. That's going to be the next piece of really big data. Not till next Wednesday, so over a week away yet. Okay. All right, guys, I'm going to leave it there. Short webinar, as I say, not much to say. Don't try to say it. So I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you tomorrow for another bull versus bear webinar.